when you do get in rooms with other people trying to do the same things, we're talking about here about real estate investing, maybe getting started. If you're just get out of your comfort zone a little bit and talk to people, your superpower will become more obvious, or your core genius will become obvious as you will start to see theirs. Folks, several months ago, I asked my audience who were some new voices, new faces, and new stories we should hear from. And the number one request was Liz Faircloth from InvestHER. And I couldn't be happier. We got her today. This has been a long time coming. We're going to talk about putting your team together. We're going to talk about scaling. And of course, we will talk about InvestHER. But before that, let's hear from Liz. Liz, how you doing?
I'm doing great. Thank you for having me, Michael. It's a pleasure. Excited to jump into all my favorite topics.
There you go. Well, let's give a special shout out to Jennifer Tam for putting this together. She did all the coordination, all the research. She took the long list of recommendations and quickly identified you as the number one request. So, Jen, we appreciate you for making this happen. Liz, give us your quick resume. Who's Liz, and what do you do in this crazy world?
Good question. Well, back when I was 2 years old now. So, I began investing about 20 years ago. I was in getting my degree in social work, actually, wanted to be a social worker, be a counselor. And my brother-in-law handed me that little purple book that has changed many people's lives called Rich Dad, Poor Dad. And as I was finishing that up, I read that and kind of, again, it sounds cliche. I said it a million times, and it really forever changed my perspective and just, both mentally, physically, and like, okay, I got to take a different next step. So I ended up getting a role as a consultant and I wanted to learn sales because that's one of the things that is discussed in the book. Before you can really build as an investor and as an entrepreneur, you really need to know how to sell. So that's where I got my start. Around the same time I met my now husband, and we started going to dig meetings, the RIA meetings, and walking for dollars, and going to all of like the old school boot camps and getting the big binders. I'm dating myself because this is like 2004. But
Yeah.
anyway, long story short, within about a year of learning, we bought our first property. It was a duplex outside of Philadelphia. And that got our, with a loan from my father, while we're still dating, which is an interesting one, but another day to talk about that. But that got our start. And then we started to really focus in on New Jersey as a market and got our start from there.
Very, very cool. Well, it's funny. I too was my life ever changed by reading Rich Dad Poor Dad, a purple book, as I call it as well. It's funny.
Yep.
I've talked to a lot of people about this, and I have no lie read Rich Dad Poor Dad 100 times. And every time I read it, my takeaway is go bust your butt as an entrepreneur, save money, buy assets. Other people read that book and they go, I want to be rich dad. It sounds like in this case, you knew you were going to be rich dad. You were gonna invest the time becoming a salesperson, and your whole takeaway from Rich Dad Poor Dad was you want to be rich dad. Is that a fair guess?
I think the concept of passive income was strong to me. Not so much, I've had to work through my own money relationship, right? So the thought of like being that, rich, quote unquote, I've kind of moved through that because, you start to say, like, what does it mean to be rich? Whole thing around that. But I think for me, that the words passive income and creating something that you don't have to work for directly, that is working for you, is the concept to me that was like, holy
Yeah.
crap, like that. I've never thought about that before. I can't just because I'm a hard worker. I grew up in a
Yeah.
family of hard workers. I know I can get a lot done by working hard. I never thought of it that I can like work smart by buying assets.
Yeah. I didn't either. It's really embarrassing. It is really embarrassing. I was an accountant. I got an MBA, and all I knew was how to work hard. And I didn't know the whole idea of having your money work hard for you. So really, really embarrassing to admit, but hey, it's now in the rearview mirror, so I can live with it.
A lot
Uh,
of those moments.
yeah, exactly. Well, Liz, one of the things that is core to your story, and I get a lot of feedback from the audience on, is you have this notion of core genius, and really it's around how to build teams. So why don't you kind of share that idea with us, and we'll talk about building teams.
Yeah, and just to kind of connect the dots, as we were developing and building our portfolio, I was working as a consultant selling a personality assessment called the Predictive Index. So
Hmm.
for a decade, I really had this level of expertise in helping build teams of small companies to like Fortune 500 companies. So I kind of thought firsthand, if that makes sense, Michael, of like, okay, that's interesting. in the corporate world, but you can make it so applicable to obviously small businesses and entrepreneurs. So what I've come to believe is that we often think, oh, everyone has strengths and you really need to build a team around one another's strengths. That's really not new, Michael. That's not going to be new to anyone listening. But I take it a step beyond that to say, okay, beyond your strengths, because I think we have a lot of strengths, like a 7 out of 10, 6 out of 10, 8 out of 10. What a core genius is. And it was Dan Sullivan, founder of Strategic Coach, really smart guy, great content he provides. He coined it something different, but that's what got my wheels turning. In essence, it's something that you're passionate about and that you're exceptional at. And typically our core genius is beyond like a position or a role. It's kind of just who we are. And we think it's so easy and natural that we honestly don't think it's that special.
Yeah.
And so when you're building a business or buying investments, because ultimately, if you're buying an investment, you're building a business, you're an entrepreneur. You must think that way. It's not just this passive thing. You need to like lean into your core genius. And that becomes you become very discriminatory, if you will, in a good way of what you should be doing and what you shouldn't be doing. And it's not 10 things. It's typically a couple. And it really is just as easy as like breathing, where you don't think it's very special and everyone else that doesn't have that thinks it's incredibly special.
It's
So
so funny that you bring this up because my audience knows that I only stumbled upon what I've generally called my superpower. I could now call my core genius
yeah, there you go.
as my focus and daily discipline, right? I have a unique ability to focus on a very finite set of tasks and do it over and over for 20 years, where most people would be bored after 20 hours. Right. I'm already wired to be excited for tomorrow because I just know that eventually I'm going to find the deal of the decade, where most people are like, damn it, I've done this 17 days in a row. I've got nothing. And to your point, I thought everybody acted the same. I didn't know until I started helping people and talk about a buy box and 20 minutes a day and all these things, that most people were repulsed by the idea of repetitive tasks. And to me, it's like, it's just breathing. It's just like, that's what you do every day. It's wild. This core genius thing is so true.
And I think that's, people are like, okay, well, how do I figure out my core genius, right? Because that's the next question. That's the question I'd be asking. And often it's something that has been with you in a long time, for a long time, I should say. As a kid, what did you gravitate towards? Just funny story, but like my parents, I was in a very busy Italian family, so we always would like eat quickly and then talk, and it was just a very busy family. And so I would escape the dinner table and I'd go to the bathroom. Of course, I'd go to the bathroom, not to get too gross, but and then I'd sit in the bathroom, like literally just sit there. And I would talk to people. I would help them with their issues, their problems. I don't even know what I was 8 years old, 9 years old, right? I don't know what problems really are. I mean, what life's pretty easy at 8 years old. But I was talking and engaging people at that age. And that is something I feel like is a core genius of mine. I love inspiring and supporting people in making a difference in their lives, right? Very broad, but I really feel very drawn to that core. And then how I do that, communicating, connecting, engaging, that's something that I love to do. So sometimes it's been with us and we often overlook it. So I often will say, start to see what brings you like the energy and what depletes your energy. It's a great place to start. I know what depletes my energy. I know days if I've been in front of a spreadsheet, Michael, I'm like, I gotta go talk to someone, and I'll go to like the bus stop and pick up my kids, and I'm like shit to the chat because I haven't talked to people all day, and I just need to talk to someone. They're like, "Whoa, Liz," and I'm like, well, "That's why I'm being so chatty because I haven't. I've been talking about I've been spreadsheets or I've had a lot of meetings, So I think it's a discovery process, but I'll just say this too. I don't think it's something you have to figure out. It's something in you. You just have to like kind of come to some curiosity and discovery around it.
Yeah, the other thing that I think really helps unlock it is when you do get in rooms with other people trying to do the same things. We're talking about here about real estate investing, maybe getting started. If you're just get out of your comfort zone a little bit and talk to people, your superpower will become more obvious, or your core genius will become obvious as you will start to see theirs.
Yeah.
And then once you're in these communities, and that's why real estate meetups are so important, more importantly, being active, right? I'm not talking about being a fly on the wall, show up, take some notes, leave. You've got to talk and communicate. You're there for a reason. And you just, when you start to do that and you start to get almost like Tetris, right? Where they just click, you really do become stronger. So people go to meetups. They're important. Join communities, be active. And you never know when you can find somebody that will just compliment you.
Yeah. And you really, I think in this business, especially, relationships versus like analytical, sort of like approach of I mean, it's a very numbers oriented business, right? It's not like, oh, no one needs to know the numbers. And that's like the core of what we do. So, but not everyone's, that skill set is not created equal. And some people are more like, I'll build the relationships, I'll put the deal together, and other people are analyzing the deal. So it takes all types, but knowing where you are on the front end or the back end, do you like numbers? Do you like the people side? And then it just starts to unravel and really hone in, because that passion part is part of it too, not just what you're great at.
Yeah, the other thing that I think is really important, especially more today. Well, let's step back. So first off, you're absolutely right. One of the things that I've admitted I did wrong was for 5 years, I lived in my bubble in my spreadsheet. I told myself excuses. Hey, I'm traveling all over the world for my day job. I don't have time to do this. Complete nonsense. It held me back. It slowed me down. Bad idea. Meet new people. One of my 7 rules is try to meet 2 new people a week. If you meet 2 new people a week, that's 100 people.
Yeah.
Right? A year. That's power. Because this, one of the things I acknowledge now is real estate. Yeah, sure, it's numbers and all of that, but it's a people business.
It absolutely is. Yeah.
It's a people
Hands
business.
hands down. And especially as you get into multifamily, which is what we've been able to scale over the years, that is definitely I don't know how to say it. Not I would say complex like rocket science, but complex in the sense of like, if you're analyzing a 200 unit, that's not the same as raising for a 200 unit. Two way different core
Oh, for
geniuses are
sure.
needed there. And so, as operationally minded someone needs to be, someone else needs to be as relationship and growth minded. And you need both on the team. So yeah, I can't agree with you more. I love the meeting the 2 people and that equates to 100. I love that because it's such a doable goal,
Mm-hmm.
and it makes such a difference because we hear net worth and your net worth is your network, but we don't do we actually do things to move us towards that, and
Yeah.
that's always the harder part.
Yeah. The beauty of this business is it's really easy to meet 2 new people a week. You just have to ask for referrals. It's really easy.
Yeah.
So, folks, take that as a challenge. Meet 2 new people a week, 100 people a year. You will be better off for it. I actually want to pivot slightly. One of the things that I've started to recognize, again, with the introduction of social media, like we both did this 20 plus years ago, where it was physical meetups, now
Yeah.
online because of the pandemic, now because of school and community with Alex Hormozy and other platforms. Something I've come to appreciate more and more as this guy at the top of one rental at a time is my responsibility, if I truly want to build something bigger than me,
Mhm.
is providing a community of other go-givers, other like-minded individuals that we could just start to scale exponentially. How important is that? I think it's a big part of InvestHER, but talk about the importance of a community, you running it as a co-founder, managing it, growing it, but also letting the people underneath it just be good people. Talk about that.
Yeah, right. It's something to build, one thing to build followers, I always say, but it's a different thing to actually create a community from those quote unquote followers. We like most great things, they come out of solving problems. They come out of some sort of like annoyance, pain that you are personally experiencing. So 6 years ago, I was partnering with my now partner Andressa, who's my co-founder with me, and we would be going to networking events. We were flipping properties, we're doing deals together, and we go to these events, and honestly, we always did feel like we were the only women there.
Mm-hmm.
And I got my husband involved in real estate, right? So everyone would be like, "Oh, where's your husband? And did he get you involved?" I'm like, no, I got him
No,
involved. I was
other
like,
way around.
I was like, the Jersey me came out, Michael. I was like, no,
Yeah.
that's not what happened.
Let's get this
So
straight.
yeah, let's get this really straight. Of course, had a glass of wine in there too. That helps, right? But it's just really important to be really clear on like that's why we started this, to create this safe environment for women. But quite honestly, at the time, and I think there is still a little bit of an old boys club when it comes to larger deals, to be honest with you. And we wanted to create a safe space for women who are looking to invest and who are investing, and provide that kind of platform, both online, offline, and then create resources to support them. That was the initial premise, right? And we didn't know if anyone wanted to do that. We just knew who we serving, what are their pains. They don't have a lot of time. They're balancing a lot of different things. So we created InvestHER with the 3 pillars of real estate investing, running that like a business, and then self-care. And
I
really
love
making
that.
sure that so the content, our conference, everything we do is really around those 3 pieces of the puzzle versus just tactical how to buy your next property. That's all important, but the
Yeah.
tactics run out if you don't have the strategy and the mindset and the way of being in the community, right? We all know how to do it, quote unquote, but are we doing it? So
Yeah.
that was the initial reason. And yeah, we've been able to build 45 meetups around the country. And we have a podcast that's weekly, and really proud of our InvestHER Con, which is 500 women come together, 40 companies we had last year or this year, a few months ago. But with all the idea of, really empowering women to take that next step in their investing journey.
I'm a huge fan of InvestHER. Again, I shared privately offline, but I'll do it here for the recording. Both my mother and sister have made relationship decisions that left them in very horrible financial situations. And if there was InvestHER kind of focused on women and self-care and really taking care of your own, um, I think they would be better off for it. It's just a requirement. The fact that there's a lot of women out there that become financially destitute at the loss of their spouse or a divorce is horrific in my mind.
And
And yeah,
I agree. And the numbers, so like the statistics, the numbers have only kind of supported this, like an initial, like we all have initial theories, right? We all have initial premise of something that we feel it, but do others. So right now, and Fidelity did this research, women control $10 trillion of the U.S. economy. That's going to 30 trillion in the next 3 to 5 years. So there's a big wealth transfer that's happening, an enormous wealth transfer for a variety of reasons. And the other side of the coin is women are looking at, okay, what do I do with this money? And they just, when it comes to managing money, very high. It's like 79%. Women are much more comfortable managing money. When it comes to investing, that number drops significantly to like 20%. So that's the shift, right? It's not just the managing of it, but it's actually like making investment decisions. And that's really what we take a stand on, not just us, but what's the right path for you? People always say, you scale to 2,000 doors. Is that for everyone? No. It
no.
honestly is. You don't need that. We built a business around that. And that's what we did. So I don't know. I don't think it's about the number of doors. I think it's about lifestyle. And when women do invest, statistically, they outperform men. Sorry,
Yeah,
Michael.
it's wild. I've read many of the same studies.
So,
Whether
so
yeah,
we're
it's
just
crazy.
when they do it, they're making, and it's not just a woman and a man thing, right? It's about a team, and and also that women are not a niche in this business anymore. So men need to know that, women need to know that, and it's just how do you build teams and network with each other? So that's what we stand on, and
I love that.
taking it one step at a time.
I love that. I love that. Well, let's talk about scaling a little bit.
Yeah.
Earlier, you talked about getting, starting with a duplex outside of Philly, I think it was. You
Yep.
just highlighted that you're up to 2,000 units. We had Pace Morby on the show the other
Yeah.
day talking
Friend.
about his 2,300 units or whatever it was. But there's a big focus lately, bigger pockets, even Brandon Turner, thankfully, all talking about, you know what? Most people should just focus on a handful. Like, I always talk about, let's get to 4, right? 4 units changes your life. If you choose to do more, great. I do think there was a time where people bragged about door count, which I always thought
Yeah,
was crazy.
I
We had
agree.
we had LPs and GPs talking about only 10,000 units when they have, like 0.5%.
Sure,
It was
sure.
it was crap. But I think most people should just target 4, and then if you like 4, maybe go to 10. What do you think of that?
Yeah, I agree with you in the sense that, listen, real estate is an investment. So you need to then work backwards and say, okay, if I would say 5 years, what are your goals? Most of the women we work with are in our community are somewhere between 35 and 50, right? In that age range.
Yeah,
So
makes
they're
sense.
looking at 5 years, differently than how I looked at 5 years as like a 23-year-old who started investing. Right now, it's a different game. I'm interested in different things now, 20 years later. My point saying all that, that matters. And it all
Mhm.
begins with that, meaning what are my, investment goals? What are my financial goals? Do I love my job? Do I want to replace my income? Am I just looking for some additional money for retirement, or am I just trying to pay for my kiddos' college? There's so many aspects of this. And I think the more clear, like, what do you want, in 5 years? What do you need? Not even need, but what do you want from a financial and investing perspective is where you start. When you get that answer, then the door count or the strategy, I always say, like, people mix up like strategy and asset all the time. Like, should I do a buy and hold or a short-term rental? That doesn't even make any sense, okay? Because you're blending too much. Asset class is one thing, strategy is a different thing. And the strategies that people are using now I didn't even know about ADUs or renting by the room 20 years ago, right? So I'm like a long-term old school investor, and I'm learning about different things.
We're dated.
We're dated. I'm like, I'm glad I just stuck to one thing. I don't even have a short-term rental. But my point in saying all that is just that I think it starts with goals, and then it starts with what would yield me those goals. If you can get your goals met with 4 doors instead of 25 doors, well, that sounds like a great idea, because that's the path of least resistance. And it just depends on how active or passive people want to be too. I don't think people think enough about that. I think some people who have professions that they love that are high stake jobs, maybe consider passively investing and lending your money out. There's so many great options versus just maybe the stock market if you like real estate. So lots of ways to slice and dice it. But I always say, if 4 doors or very few doors, free and clear, can get you to where you want to go, because that strategy, it's making such a amount of money every month. How active or passive are you? And will it get to your goals? And do you need a shift? That's where I think the strategy part comes into play.
Yeah, I love that. I love that. Well, I'd be remiss if we didn't really break down how you transition from a single duplex to thousands of units. I'm sure there were kind of
with a wand, with a magic wand, Michael. It's like this.
You just snapped your fingers.
I wish.
Yeah. Well, why don't you break down the big kind of jumps? How'd that all break down?
Yeah, there were a few very pivotal jumps that I think, in hindsight, really taught us a lot. We were just in the first 5 years, we were very committed to only investing locally. If it was not within 30 minutes from our house, we did not invest. So what came along with that is we built a property management team. We built a construction team. We were very, very hands-on, and me and my husband running this business. I built our property management, SOPs, which is crazy because I shouldn't be building SOPs, but regardless, that's what I did at the time. You do everything. So we started to say, and this is really important, where we want to be, in 5 years. And I just said it, but we asked ourselves that question. And we also said, what do we do really well? And what are we struggling with? And when we were looking at, we had about 100 units at the time. It took us about 8 years or so to get to 100 units, all local. And when we looked at what we were doing great, we were raising money, we were starting to build. We had done a couple syndications at that time with a small group of investors. And we said, what are we doing well? Okay, thought leadership, teaching, sharing, getting our assets performing really well, and raising money, And so we really started to lean into finding deals, raising money. We said, what are our challenges? Because everyone has them. And I think for us, the property management piece was it's a high management need, right? If you're managing 100 units, not just in investing in the 100 units, you're managing them too. And so we said we need to like outsource this. So what forced us to do that was to actually start expanding our market. And we got presented with a 49 unit about an hour and a half from our house. And I remember my husband saying, I remember the conversation, because I feel like every pivotal moment, Michael, honestly, I usually make the right call. And my husband's like, thank God, you were really adamant about that. I'm like, yeah, why don't you know that I'm always right? No, I'm joking. But I haven't been always right. But there was that moment, and I was like, he said, we should really build a team local to that building, and then we can still manage it. I said, let us use this as an opportunity to pivot our business. And so we did. We outsourced property management for the first time, which was really hard to do, but it was an hour and a half, and we didn't see the benefit of hiring a local team. And that was probably the best thing we did. And then since then, we've never managed our own property again. Now, that then presents other challenges, and we now have built a property management company for many of our units full circle just as a recent, because it made sense to build a 30-person team, not like a 2-person team. Right. But my point, kind of giving you this full circle, was that what we outsourced at that time, and for many years after, allowed us to really zone in on our core genius and then build upon that with partners. So then the 49 unit led to a 200 unit, and then we started to get into large multifamily with more operationally analytical people who were able to do that side where we were, more geared towards the thought leadership and the raising money and all those pieces. So that was a big aha for us, and that was a big pivotal moment, to be honest. And we've sold a lot of the smaller property because, again, when you start to say, okay, why do we buy this? Do we want to own it long term? It all becomes like a strategic landscape that you need to say what makes sense now, what makes sense for the future. It's continuous. So
Yeah.
letting go of property management was probably the best thing that we did to scale.
Like it. A couple follow-up questions just so I make sure I had the vision in my head. When
Yeah,
you start raising money for these larger deals, the 49 unit, the 200 unit, I'm assuming that is equity, meaning you have equity partners versus a second or some debt structure or something. It's they're
correct.
equity partners. Okay.
They're equity partners, they're limited partners.
Mm-hmm.
And a lot of, obviously every project's different, but they are also the larger owner of the property. So they usually, a lot of our buildings, I want to say it's 70% are LPs own, where then
Oh, gotcha.
the GPs own about 30%. Now that could also mean that the GPs splitting that up, amongst the GPs, right? So when people say they own tons of properties, yeah, how much do you actually own? But
What percent of that is really yours? Yes,
what
yes,
percent
yes.
of a percent, right? You got to remember it's like a percent of the GP. But I would say though, we did optimize when you're raising money and you're using, my husband wrote Raising Private Money for Bigger Pockets. And what we found was private lenders were great for like the beginning, middle, and end projects. So meaning a fix and flip or even new construction, or a project that you're going to be able to refinance and pay them back. So that's what private lenders are great for. That beginning, middle, and end project that hopefully the goal would be within a year. You pay them back. It's all, it's a debt position. They're lending you money, you give them their percent back. That worked great on fix and flips and short-term projects for us. When it comes to the long-term properties where you're actually buying property, right? It becomes a little harder to do that, especially if they're not stabilized. You're not going to get in a year and flip it per se.
Sure.
It's just a small project. But yeah, the projects we were getting in were 10 units plus, and we needed more time, 5 to 7 years. I will say not to give a crash course on raising money, the other part that people do, I think, they're just making a mistake and they need to be careful, is when you're partnering with people and one person's they're investing money and one person's maybe investing time. Those are active partners, and that's not an active partner, and that's a syndication. So people always think syndication is the amount of units or the largest of a project. Not necessarily. It's the way you structure a project. And so I see a lot of small investors partnering with one person. One person's not doing anything but literally investing money. That's a syndication, and you got to be really careful with the SEC. The way around that, or the legal way around that, I should say, that right, is that everyone's active on some level beyond investing the money. So our first partner, we were 50-50 equity partners. We bought 2 single-family homes together. He did put the money in. We didn't put money in, but we also had other roles as well. So we were the local boots on the ground. We hired the contractor. We managed that part of it because there's a very big value add project. And he audited the books. He did other things in the business too. So that's the way you can have an equity partner on small projects without getting into all the. When you're in a syndication, they're passive, right? Our investors are passive. They're not, hey, I think you should use this type of paint or that type. No, that's why they're passive, right? They're limited. Here's my money. I want my return, and keep me posted.
Yeah. One of the other things I wanted to ask kind of in this story is you start building out to bigger and bigger properties. You talked about selling, your first 100, right, that you had built all locally. Now I'm curious, did you sell those or did you 1031 those? Because those are different animals.
Yeah, no, absolutely, right. And you always have to be, as a real estate investor, you're always being mindful of the tax implications to all of it. Here's a quick tip before I answer that question. before we've done anything like that, where we've sold properties, we buy properties, we always have like this quick strategic call with our accountant and our CPA,
Yeah.
because he's going to give us like, hey, based on your portfolio, based on everything that you have going on, and especially this year, here are some thoughts. And that really helps us. So many people call their CPA after the
After.
fact.
Yeah. What are you doing?
Um,
Yeah.
yeah, and they're like, that was not smart. So I'll just say that was something we learned over the years. I
I
wish
like
we had
that.
done that sooner, but regardless. And make sure your CPA is real estate friendly too, that they actually have properties themselves. But
Amen.
to answer your question, now I forgot the question because I went on
Did
to
you
the,
sell or 1031?
thank you. Some of them, I would say most of them we ended up um, selling because they're in different partnerships, meaning,
Okay. That makes
yeah,
sense.
it gets a little harder when
Oh, yeah.
when you have different people. We've done a couple of them that are with about 18 units. We ended up doing a 1031 into like the 200 unit
Mm.
building. That worked out great because we had everyone's agreement, but we had everyone's kind of agreement that we can continue
Yep.
on doing that. When you don't, or someone wants out, it just becomes a sale.
A mess.
Um,
Yeah. Yeah.
so
Okay.
that ended up being that's how we structured it.
Yeah. Very cool. Well, one of the things that if you go back on my channel, One Rental at a Time, I was warning people about syndications starting in 2022. Jonathan Twomley and I actually turned $100 million property into 48 million, which is a couple of tweaks, right? Cap rate,
Yeah,
NOI, all of those things. Anna Kelly and I, who spoke at
yeah, good
InvestHER in
friend.
Texas, we've talked about how a lot of syndicators were nothing more than financial engineers. They were not operators. One
Yeah,
of the scariest events I spoke at, one of the reasons I still speak at events or REM meetups is because I want to know where the audience is.
yeah,
And
agree.
I was bought to an audience in, I think it was 2020, it might have been 21, Silicon Valley. So a lot of tech money. And I was the buy and hold guy, right? Then they had a syndicator guy. And the entire audience was not interested in buy and hold. They wanted to all be brand new syndicators. They all had 5 friends with 6 figures of money
For
coming in.
sure.
And lo and behold, we saw more transactions in 2022 and 2023 we've ever had. We've seen more assets trade within a year of each other. We saw more bridge debt. We saw more bad deals done.
Yep.
And we're currently in a lot of extend and pretend, but I suspect there's a lot of LPs that are going to lose their ass because they were just bad deals done. What do you think of all that?
I completely agree. I think what ends up happening, and you saw this more post COVID in a lot of ways. And so to your point, it was really post COVID. You saw a lot of folks that you're right. They weren't because you can raise money doesn't mean you know how to actually operate an asset. Those are two different things. I
Different.
they're
Different.
they're completely different. Now, ideally, what I always really appreciated with how we built our company is that we were operators and we are operators as well. I think there are people who are better operators, but doesn't not better in the sense that like we can't do it, but we did operate
Yeah.
our own portfolio in that
Right.
you don't just step into something and be like, no idea how to operate this business. And I do hear that a lot. I hear people that I know like and respect, giving keys back to the bank. This is not something that I've heard once, right?
Yeah.
And so you also had this other, the interest rate, going up, and people didn't expect that. So you had a lot of different things at play, which created a perfect storm, I think, for people. For LPs, I think you have to still be mindful of any project you're getting into. Something that we're even pivoting to on the DeRosa side is more new construction. We've always been like beat up properties, older assets, turning them around, stabilizing them. And we're finding that, that also comes along with a cost, right? Because
Yeah.
they're so, as we're pivoting and bringing into new projects, we're looking, okay, what makes sense long term, what's, and you just continually make the right calls on your portfolio. But I don't think a lot of these folks that were syndicating were in it for the long haul. Like last week, they're in that profession. Next week, they're in a different profession. I think being at something a long time, you have more of a reputation to uphold, and I
Mhm.
think that matters in this business.
Yeah.
When you just
I,
jumped in and you're jumping out, no one remembers you. But if you've been in this, it matters, right? Your reputation's on the line.
Yeah. I think the saddest thing, because again, I've been doing this for almost 30 years. I bought before the Great Recession. So I lived through that. And one of the
Mm-hmm.
things that,
Yeah.
I got right and told people, but not a lot of people listened, frankly, was we were repeating the same stupidity in commercial, aka syndications, that we did in housing in 2006. Short-term
Mm-hmm.
debt, variable rate debt, stupid assumptions. Everything always goes to the moon. We repeated the same lunacy,
It's a really
except
good point.
last time the average debt was LTV was 98%. So the banks took the haircuts. This time, I don't know, 70, 75, 65%. So the equity loses this time.
Yeah.
And that's going to be a sad state of affairs, I think.
Yeah, no, that's a very astute point. That's a really good point. But it I think for folks that want to be passive, they need to do their due diligence. And at the end of the day, I'm a passive investor as well in some of these projects and beyond our own projects with people that we like, trust, and respect. You just have to take that responsibility. Like, hey, what can I do differently next time? And how do I mitigate my risk? Right? That's the question. And if your operator or your syndicator doesn't have like plan A, plan B, plan C, maybe even plan D,
Hmm.
and it's just like if all of this is for this all to work, and it's like, hold on, this seems a little too
Yeah.
good to be true. So
Yeah, the other side of this, again, because I've been through the fire before in residential, it's the same in commercial, just a different asset type. Is there's likely going to be people who get through the fire. Ken McElroy is a great example. He's already started buying, again, buying a very Class A kind of
yeah,
stuff. So it's retrading. Class B and Class C not retrading yet. So no price discovery yet. Um, but on the other side of this, there will be deals of a lifetime.
absolutely.
And I think LPs, it's going to be really hard to raise money, I think, because so many LPs got in, then went all in and, rolled craps or whatever it is in the casino. So I think it's going to be remarkably tough to raise money, which means you're probably going to get better deals, because that was the crazy thing again of the single family market. Why did single family crash so hard? Because banks wouldn't lend. Right? Prices had to fall so hard that I had to go to a hard money lender that charged me 12 points or 12% interest, 3 points to borrow 70% of purchase. And that's why I saw assets, that started at 300 go to sub 75, because there was no bank lending. So
Yeah.
again, on the other side of this, if raising capital gets as hard as I think it will, it's just going to mean the deals get better, which is a wild thing to think about.
No, absolutely. And I think for those who want to be more passive, you got to vet the operator, of course, but you also have to vet the deal in the sense that enough that you're like, okay, based on the strategy, we're doing 5 different new construction projects right now. Yeah, we're people say we're in a recession, there's a looming recession. So of course the question on the table is how do you mitigate risk on any project? Quite honestly, that's just a smart investing
Yeah,
strategy.
it's a good
But
question.
great question. You don't want to work with operators not asking that question. But the way you mitigate risk on a particular project and what the operator's answer is for that matters, right? How do they answer this? How do they answer that? Where's the rest of their track record? So all those things matter, but don't forget about the deal. Don't forget about the operator and the market. Markets matter, right? It's like,
Yeah.
people are, I'll turn this market around. Well, we
Nah,
only can participate in markets in
yeah.
general. We can
I,
only,
I I
right?
have no idea if you're going to agree with this, and I have never done a syndication. Likely, we never will. So this is just an opinion.
Sure, sure.
I think it's like, if I was going to invest in a deal, how I think people should evaluate it. The stack is the operator first, the location, city, whatever second, and then the deal. I think too many people look at the deal first and the other two secondary. It's a great deal could blow up because of the city or the top of the food chain.
I
So I
literally
think
just
it's
recorded. I love what you're saying, Michael. I just recorded a podcast today about this because a great operator can pivot strategy, right, very quickly because they have the resources, the relationships, the network. The market, you're only participating in a market. You can't control it. And
yep.
people always put the deal in front of the market. And I'm like, that's the worst thing you can do.
Right.
And then and the deal comes thirdly. I mean, you know great operators right now, I completely agree, that are going all in a market, and they have variety of assets that they're working on. They're doing commercial, they're doing residential, which some people are like, that's crazy, you should focus. Well, what are you focused on? If you really are a market expert, you
Yep.
know there are opportunities that are commercial and residential in a sense. Like they might be a warehouse play and
Yeah.
a need for XYZ. Where other people are like, no, you have to be a niche and be a multifamily investor. That's I think that's old thinking,
I
to be
like it.
honest. And also you can't move very quickly. You can't move quickly if you don't know the market. And I see new investors always like, they'll tell you everything about a property, and then you ask them two questions about the market, and they're like, I
Huh?
don't know. I'm like, that's a problem.
That's a problem. Oh,
Yeah.
I love this conversation, Liz. Well, do me a favor. Somebody wanted to learn more about you. They wanted to learn more about Core Genius, learn about scaling, and most importantly, invest her. Where should we send them?
Yeah, absolutely. So I'm pretty active in our Facebook community. We've got 17,000 women there. It's InvestHER Community. You can literally tag me, Elizabeth Rendazzi, my middle name, Faircloth, and I will answer a question. I'm there all the time. I answer some questions today. I'm always kind of active there. Yeah, and I know a lot of folks. I know you have a lot of men in your community and women. We have free events online, therealestateinvestor.com/event. We always
Nice.
have free events happening. We have a syndicator actually in the mineral and oil business, which is an interesting niche. But talking about due diligence, how to do due diligence with passive investing coming up. So those are free. Anyone can come to those. So highly recommend engage there, or for the women out there, come in the community, ask for what you need. This is a group of like-minded women playing at the same level. So it's a very safe, supportive group.
Yeah, and folks on my channel, again, Anna Kelly, longest time millionaire guest, 5 years running. She spoke at Investor in Texas. She loved it. She's
Yeah,
a
good
big
friend.
proponent of it. So shout out Anna Kelly for being there. Liz, thank you very much. This is a wonderful conversation.
Yeah, Michael, thank you so much for having me. I really appreciate it.
You got it.